Hi everyone, today let's do a quick update on the March investing strategies. What are the best winners and what are they looking for the next month? A little bit late here, but I do like this series and I do want to keep talking about how they're playing these markets. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at the strategies, we've been talking about these a few times at this point. Finimize, momentum edge, sliding as you would expect, pretty much in line with the S&Ps. Easy Rider portfolio rising 0.4, global stocks fell 0.4, US stocks tumbled, Bitcoin terrible, and then momentum rider very slightly positive in February thanks to gold, but they did stumble with Bitcoin going down. But let's take a look at them a little bit closer here. So this is how it works. They look out the 11 best stock performers when it comes to momentum edge. And when they say stocks, they really mean sectors here. So they're looking for the best sectors. This has been a massive outperformer. Definitely struggled here recently along with the rest of markets. And you can see the sectors that they were in. Discretionary is very, very terrible. We talked about that being not so great. We said staples was the opportunity, and that turned out to be very, very true. And then momentum edge up 3.6%. Outpacing the S&P's 1.4% gain so far. I'm not sure if that is still true after what we saw in this previous week or not, but what they're looking at, consumer discretionary, that's what we disagreed with. Communication, still good there. Financials did struggle a little bit over the last week, but overall, still a pretty good opportunity in the top three. They're just doing a simple 1/3 to each of those. And then Easy Rider portfolio, 60% growth. Global stocks, 20% bonds, 10% commodities. Not a huge fan of that. Bitcoin, absolutely not. Gold, I totally get it. Gold has been on a good move. This is what it looks like right now, 60% stocks. Like I said, you can see all the percentages there and what individual things they're holding. If you're curious, Easy Rider portfolio has done quite well versus global stocks. Not so much necessarily against the SPY stocks, but overall, you can see it here. Global stocks, Easy Rider. Been in good position, underperforming here a little bit recently. Again, not a huge fan of that Bitcoin, but on the down moves, you can see the down moves are always a little bit less on this portfolio, so you like to see that. Maybe that's a good place to be if you have to be somewhere right now. If you excluded Bitcoin, which I absolutely do, that would be a 0.9% gain, so definitely somewhere to be. Bitcoin was a massive underperformer. Everything else did pretty well. Did pretty well except for US total stocks. Could have avoided that, but you never know. And then looking at Finimize, momentum rider portfolio, this is the best performer. Huge outperformer versus global stocks. What are they in right now? Notched a 0.24% gain. If you excluded Bitcoin, which continues to be the underperformer, it would have climbed 1.1%. What are they in? You can see long-term bonds. Absolutely. You love to see it. We've been talking about it forever. Bonds, bonds, bonds. Buy them up. Total bond market, BND, continues to be good. Exclude Bitcoin, not a huge fan of that right now. Emerging markets, okay. International bonds, okay. Everything else seems to make sense relative to what I've been saying on the channel. Looking at fear and greed, we finished the week at a 20, the same as a week ago. So we stayed in extreme fear the entire week. We had a slight dip to 17. That's just about as low as this metric goes on the overall indicator. All of the indicators pretty much are in extreme fear across the board, except for junk bond demand. Junk bonds are still getting bought up. The spread is relatively tight between junk bonds and investment grade bonds. Bonds continue to be a pretty good place to be. Every other metric here is in extreme fear. So definitely oversold. Does that mean we're going to bounce immediately? Not necessarily, but it is a pretty decent contrarian metric to sit there for a week. Moving over to the AAII survey, we did get neutral expanding just 3 points here, so very, very minimal movement. Bulls in the same vicinity, almost to the number. Bears getting a little bit of a decline there, not much, but a little. Is this the start of a bit of a counter trend rally? Certainly a possibility. 2 weeks at this zone makes sense for a little bit of a retracement, but right now, tons of bears in the market, and we have seen consistent selling. Moving over to seasonality, you can see the fall up until the 10th. We have seen a pretty consistent down move early in the month. The 10th is supposed to be a relative bottom. See some consolidation, maybe a little bit of a bounce here. We'll see. But for now, we are following that regular year track. The low of the month would be the 17th. Flat for everything else, slightly lower low for the Russell, and then we see rallies into the end of the month pretty much across the board. If we end up getting a more post-election year, then you can see peak here around the 19th or 20th, and then we see a decline pretty substantial from there before rallying into the end of the month. But for now, looks like a regular year with that bearish move so far. Moving over to the seasonal calendar, you can see bearish for the Monday. We'll see if that follows through. I'm kind of looking bullish for Monday. We'll see if that plays out. Bullish for Tuesday, and then pretty flat throughout the rest of the week. We do have some CPI data on the Wednesday. That could be interesting. Average March gains, 1.2%, up 13, down 8. Not a super great metric there. We also have PPI on the Thursday, and then some Michigan data on the Friday. So fair amount of data as we get closer to that quad witching week, which was up 7 of the last 10. So third week, looking for a pretty bullish move. Maybe not so much here on that second week of March. Moving over to the economic calendar here for the 11th, we do have the JOLTS report. Really nothing there for the Monday. 3-year note auction also coming in. Like I said, core and headline CPI for Wednesday. That's the big one for the week. 10-year note auction also going to be interesting. PPI for Thursday. 30-year bond auction there on Thursday as well. Michigan data. Really not a whole lot besides inflation data this week. It'll be interesting to see how markets move without too much economic influence, at least on the data side. Moving over to max pain, look at these max pain numbers. Only 1 million options, but put call ratio 5.75. Huge puts here at 540 and 530, even bigger at 490 and 480. Huge transactions going through. Do I think we're going to get anywhere near those? Absolutely not. Max pain in there at 597.50, 580. There's some puts in there. More normal number, 585 is where we're at. Realistically, I think we could get back above 590 based on these numbers. Not a whole lot of options. 589 up to 600 makes sense for me. Moving over to the charts, looking at the SPY here first, you can see down 3.1% right to the trend line, hit the trend line and bounced from there after breaking this one here. Flowed right from that 21 all the way through to that level. The trend line next week is going to be at 57.51. You also have that 55-week moving average there at 56.01. If we did get that move down, it'll move up just a little bit for the week, but around 2.69. Then I would expect a little bit more of a bounce in the short term. Momentum still bearish, RSI still bearish, huge volume on the selling candles. We haven't seen this kind of volume on selling candles for a while, so we'll see. We'll see if it can go much lower. The previous bigger move down was from top to bottom, around 8, almost 9%. About 9% to the bottom in there. So are we going to get a move like that? If we do, that would take us just past that 55 EMA. Wick that level, I would expect that we're going to get a touch there. In the short term, I'm still looking for a bounce, maybe Monday, Tuesday, maybe just Monday. We'll see, but ultimately, I think we're going to hit that 55 EMA, culminate around that 9 to 10% lower, and then we'll see what happens after that. So trend support in here. We'll see if it ends up holding. Still expecting a little bit lower lows, similar to what we saw on this move in July. And then moving over to the SPY charts here, you can see the 200-day moving average sitting there at 569.54. We'll see if that level ends up holding. 569.90 is my level that we ended up holding after getting the test there on the Friday session. Like I said, wouldn't shock me to see a little bit more of a bounce on the Monday, Tuesday, maybe get up to that 9 EMA, really probably just the 9 EMA before we see some kind of rejection. So that would take you all the way up to 584.50 or so, somewhere in this area here. My level 585.90, maybe touch that level and then reject lower. You also have that trend that I was talking about in here, 556.73 or so. Do we pull back, hit that trend, and then bounce? We'll see. Either way, momentum still bearish. We're kind of culminated just about as bearish as you get on the momentum. You can see here we're at a minus almost 3 level. I think we did touch the 3 level briefly. Yeah, 3.36 on the Thursday candle. That's just about as low as it goes. We've seen some in that same area here around 3.84 and then a 4 number. It's about as strong as the momentum goes on the daily chart, and you can see that flow back here in the July timeframe. Super uncommon to see it go that low, and we're pretty much there. Usually we start to see some kind of retracement to the upside, so watching for that on the daily chart. We're kind of basing out here on the RSI. You can see a double bottom already in. Want to see it push at least to the SMA there at a 43.96 on the RSI. So again, expecting at least a short-term bounce, 1, maybe 2%. Then we'll see what happens from there. Does it flow to a lower low? Certainly a possibility. Moving over to the weekly chart on the Tasty charts, you can see that weekly trailing stop 565.09, and the low of the week was 565.63. So very, very close to a touch at that level. I think we did pretty much get the touch. Technically we didn't, but very, very close, and we did catch a bounce from that zone. So again, I think we're going to see at least a little bit of a retracement into the 585, maybe as high as 588 based on this chart, and then I would expect a continuation lower down to that 557.62 area, which is the 55-week moving average. You can see huge volume on the week. We haven't seen volume like that on the weekly chart in a very long time. Going back here all the way to March of last year, we had a huge up candle, huge volume coming through, and that led to a very powerful rally to the upper band of these ATR bands. Now we're seeing it on a sell candle. Very, very interesting. We'll see if that continues to flow to the downside. I expect that it will. Looks like a clear topping pattern. We did close pretty much right at the level that we saw 13 January. If we get below that, that's going to be terrible, but for now, it has not broken quite yet. Looking for a bounce from that level. And then you can see it here on the daily chart. Super, super extended. We got extended on the 4th, continued to go lower, throwing wicks to new lows, but still holding right at that lowest ATR band. So that lowest band is your target on a closing basis to close above that level. Right now it's at 571.86, and it seems to step down about $2.50 every day, so about 0.5% each day on a closing basis. We'll see if it can roll down or not. 8 EMA has been your resistance. You can see we got in that range here, and that would give you a resistance at 582.93, a little bit of a lower low, a little bit of a lower target on this chart, which is always why it's good to have multiple targets. And you can see bearish conditions on the daily chart, so looking a lot weaker on the Tasty charts. Moving over to the NASDAQ, similar thesis to the SPY, except way weaker here, down 3.27. It was down way more during the week, got down into the 5.5 range for the week, hit that 55 EMA, touched that zone, touched the trend in here. The trend is technically a little lower on my charts, but we're calling it a touch, pretty much right in that same zone as the 55. Touched it just by the penny, and then we caught a nice little bounce there. Again, part of why I'm looking for somewhat of a retracement. If we see this rally up, just a couple of candles, hit that 21 EMA as resistance, and then we see this roll to the downside, that is going to be catastrophic for markets. So waiting to see if it plays out like that on the weekly chart. Certainly could. Maybe we get one consolidation week and then a push up, 21, retest, continuation lower. That's going to be brutal here. So looking for a couple of those moves. Either way, looking for some pullback in time, maybe slight relief rally. And then looking at the Qs here, you can see that big up candle on the Friday, 0.74 to the upside after being down well over 1%. You can see to the low about 1.5%, ended up positive 0.74. So really big reversal candle. We've seen this a couple of times. You can see it here. Big up candle, went slightly higher, retraced all of that and sold. Hesitation candle, up candle, big gap down and fall. So wait to see what happens. It could absolutely go right to here in the 500s, 501 area, maybe my level 503. But if it does, but we could absolutely see another move like we saw here from the Wednesday into the Thursday, which was terrible. That was 2.75% to the downside. So we'll see how it plays out. Right now, I'm looking for a little bit of rally. I've been wrong, but again, we hit that 55. We got a nice bounce off of there. You can see this kind of consolidation low in here as well, around that 484 area, touched that level. My level was 481.93, made a little bit of money on the Friday. Again, looking at the MACD here, you can see we got all the way down to a 4.15 on the negative momentum. That's just about as low as it goes. 4.5, 4.6. We saw some in that area going back to July, but you don't see that super often, and that was a really big move here for the NASDAQ. That took us 15% lower on the NASDAQ, and right now we're only sitting at about 9%. If you count the lows, that's closer to 11%. So we'll see if that is enough for a relief rally. I do think that it is, so that's what I'm looking for the Monday. Moving over to the Qs here on the Tasty charts, you can see we didn't quite get to that trailing stop. That was at 476.01. The low for the week was 480.53. So we have a little bit of room to go before we hit that trailing stop, about another 1% or so. But you do have that 55 EMA that was at 478.97. Again, just a little bit lower than the price. Huge volume coming in there. It'll be interesting to see where that volume came in. Either way, it is selling volume for now on that weekly chart. Yep, and you can see here, definitely some volume coming through on that 4 March candle. Ended up being a slightly bullish candle, but then we went way lower the next couple days. Still right at that lowest ATR band on a daily basis, on a closing basis there as well. So you got 488 for the band right now, 488.71. We'll see if that continues to be support on a closing basis or not. 8 EMA has been your resistance. That's at 553. So maybe we get a little bit of a rally into that zone, 553, 531, maybe overthrow it to the 144 sitting just behind it, which is at 501.63. Hit those zones and then reject. That would be interesting. But either way, momentum starting to step to bullish. Huge volume coming through on the selling overall. Moving over to the Russell here for the weekly, down 405 on the week, went right to the level. 201.88 was the level at the low. Talked about it during the week, came into that zone, found a bounce. The target here still would be the trend line, maybe a little lower at 256 cents. You got the 200 SMA there as well at 210 cents. So maybe there's a little bit more in it before we find a true bounce, but for now, we definitely found a little bit of buying. We saw this at the end of the week, the previous week, ended up going much lower. So doesn't mean we're going to bounce immediately, but definitely some movement coming in at the end of the week. And then looking at that daily chart, like I was talking about, we had the zone here. Once 205 broke, we went right to the next level, bounced back above 205. So pretty wide ranging candle. Again, still looking for a little bit of a bullish push up to 208, potentially 9 EMA sitting in there at 210.53. If we did get that retracement, that would give you about almost 2.25% higher in the short term. So again, looking for some rally in the short term, very much still bearish conditions on the daily chart. Moving over to the Russell on the Tasty charts, you can see bearish conditions on the weekly. This is the first flip we've seen across the 3 major indices. Closed below that trailing stop at 206.40, hit the 144, ATR bands rolling to the downside. This is where you start to see those rallies, retracements, retest some of these levels, and then get the continuation lower. Now that you're in bearish conditions, the lowest ATR band target would be 196.29 here on the weekly chart. So that would give you a pretty substantial potential for a move lower, but you can see here trailing stop now is 239.78. So you have a ton of room to rally and still stay in bearish conditions on the weekly chart. And then looking at that daily chart, still super extended, well below that lowest ATR band, which is right now at 206.93. I think we just need that relief rally to give us more room to the downside. Pull back in time kind of move like we did here. So you hit that lowest ATR band, super extended, pulled back, went to the lower low, pulled back, and then we got a really nice downtrend after that. So still expecting bearish moves. Trailing stop here on the daily chart is 223.48. I don't necessarily think we're going to go that high, but again, relief rally, pull back in time, allow these bands to catch up, and then get that kind of final culmination move to the downside. I think that's what I'm looking for. And flowing through these a little bit more quickly now that we're done with the big 3, you can see the Dow was down 2.3% on the week, hit the level 426.20. Once we broke this, that's what you were looking for, and we did get it. So you got a nice trade here, close below the level, continuation to the next one. Looking for a move to this next area. That would take you to 418.38, and then you got the trend line a little bit lower in that 414 area. Looks like a clean double top so far. Waiting to see if that midpoint gets taken out or if this is more of a sideways consolidation for now. Still got that 55 EMA weighed to the downside, so could just consolidate for a while. Wait for this to kind of catch up somewhere in that May-June timeframe, and then once this gets the bigger breakdown from there, that's going to be a culmination style move in my opinion. Potentially take you all the way back to the highly traded zone, all the way in the 383 area. Seems like a potential short-term target, and then seems like a potential medium-term target. And then you got those longer-term EMAs and SMAs all the way down here at 358 and 349. So way down here. If you did get that kind of culmination style move somewhere out here in the August-September timeframe, which is what I think it would take to get into that area, that would be about 15% lower from current prices over the next several months. Moving over to the equal weights here on the weekly, you can see the big breakdown here, pretty substantial from top to bottom. That was about 8%. Pulled back, rallied up, lower high consolidation, and now we got the big breakdown candle, closed below all of these bodies and wicks here from this consolidation. Headed back to these lows here, in my opinion. 173.05 was that level. You got the 55 EMA in there as well. So same thesis that we were talking about, waiting for this 55 to just kind of consolidate and grind slowly higher. And then once we see that bigger breakdown, then I think we're going to be headed closer to those longer term EMAs around the 155.60 area. And then once we see that move, that's about 12% lower. And then once we see it, I do think this is going to be a really nice buying opportunity. Things are going to be much, much cheaper. That's going to take you back to the highs of this consolidation from July of 23. So medium term, still very, very much bearish in my opinion. Short term, wouldn't shock me to see a little bit of a bounce in here. Maybe test the level 179.94 and then get that continuation lower, potentially to the 55, or get that clean break to those bigger lower lows over the medium term. I'm not saying it's going to happen quickly. Like I said, I think it could take several months to get into that area, May, June, maybe even as far as July. Moving over to the ratios, the SPY has been the massive outperformer, continues to be a massive outperformer this week, pushing all the way to that next level, 278 on the SPY Russell indicator. Gonna have to add some levels here. What's the next level for this chart? Going all the way back to December of 2000 was the last time we were this expensive on the SPY relative to its peers. Let's go ahead and take it out to the highs kind of here from this consolidation. July of 2000 makes sense for me. Pretty much right at the lows. Let's go ahead and capture those lows back here from January of 99. So we'll throw it in there. 2.91 makes sense for me. And then going back to current, you can see we're right at this level. We overthrew it and closed just below it. If it breaks out here, that's what I'm looking for. But SPY Russell looking very, very, very strong. And then looking at the NASDAQ SPY, continues to sell here below this consolidation, took out the midpoint. If you're looking at this as a double top, which I think is a fair assessment, probably going to head back to 343, 200 SMA sitting in there around the 3.33 area. Momentum bearish, RSI bearish. At this point, you would expect this ratio to get overbought. You can see last time we were overbought, that was kind of a culmination point. Expecting maybe one, maybe two more candles. Maybe we get to that next zone and then we'll start to see this roll. But for now, the SPY continues to be the best on the board. Moving over to the SPY divided by the M2 money supply. 3 bearish weeks in a row, just like we talked about. 227.21 was the level, closed below that, hit the 200 on this indicator and bounced a little bit. We're right at the consolidation lows here. Remember, the highest level that we have been able to sustain for any length of time is 22.05, so still looking at this to sell about another 17.5% from the highs. That could take you as low as 22, 23%, somewhere in there. Momentum bearish, RSI bearish. This continues to show weakness in my opinion. Again, wouldn't shock me to see a bounce from the 55, maybe hit this level, maybe a little bit higher, and then we see that bigger drop down from there. But for now, consolidation high, waiting for this structure to break down, and I do think that it will. Moving over to Apple and Microsoft on the weekly charts here, 1.15 and 0.93 to the downside. Interesting to see Apple actually underperforming this week. It looked better during the week, but I guess on the weekly close, it was not as good as Microsoft. Certainly has fallen a lot more over the last couple of weeks versus Apple for Microsoft, but for this week, it held up okay. So looking at the levels, 394.22, that's the one we've been watching. We closed below it through big wicks to the lower lows, took out the low here. This was a perfect example of that 55 catching up. Took a long time to do it. You can see here, August of 24, we were waiting for it to catch up, and it finally did here in February of 25, and now we got that huge breakdown. I still think we're going to see lower lows, but relief rally, push up into the zone, 414, maybe as high as 420, and then we get that bigger culmination low to that 144 EMA in that 343.50 area. So looking for about 6.5% higher in the short term, and then in the medium term, you're looking for that 17.5% lower if we do get the rallies out. And then looking at Apple here, you got that 55, waiting for that to kind of culminate. That could take a very long time, July of this year, potentially. Let this kind of chop sideways for a while. That's what I'm looking for, still sideways consolidation here on Apple versus Microsoft, which has broken down. Moving over to NVIDIA and Tesla. Tesla was down 10.3%, one of the worst here across the board. It's been a huge seller. 430 all the way into the 260 area, massive down legs. 200 is your target right now, sitting at 247.86. I think this is an interesting zone. Momentum still very bearish, huge selling volume. Does it find some support in this area? Absolutely a possibility. It's round trip this move fully here. Big up candle, kind of the peak zone was that 264. Huge move, full round trip. Is this the zone where we start to see buyers come in on Tesla? I could absolutely see that being a potential. And then looking at NVIDIA, another thesis where you got that 55 EMA kind of drifting higher, waiting for this to come into a zone where it can be tagged. Got a first touch. Got a nice bounce. Now we've closed below that, right at the trend line here on the weekly, down again almost 10% for NVIDIA. Both of these have been moving in a relatively similar pattern over the last 3 weeks. Straight waterfall selling, 13.3, 13.2 for Tesla, 7% for the previous week for NVIDIA, and then basically in line with each other, big selling there. So next level, 106.64. Both of these had an okay Friday as well, so we'll see. Medium term, however, even if we get the rallies looking for lower lows, Tesla, maybe this is the consolidation low already. Could be slightly different. Moving over to Amazon and Alphabet here, you can see Amazon down 6.14%. Alphabet, on the other hand, was somehow positive on the week, 2% coming off of that 55 EMA. That has been support a few times. So you bounced here on the weekly in September, got a nice push. We are in that zone again. We touched it last week, touched it this week, and now we're looking to see if we can bounce into the following week. Somewhere into that 185 area makes sense. We're at the trend line here. That's interesting as well. Is this a breakdown, retest, breakdown scenario? Certainly a possibility, but for now I would definitely take Alphabet over Amazon. We did get Amazon bouncing off the 55 as well there, 194.82 on the weekly chart. Still a big down week. Your support and you have resistance here at 255 cents, momentum bearish, RSI bearish. So Alphabet seems like it might find a little bit more upside. Again, still looking for a little bit of short-term rally on all of these, but medium term, structurally, I think we're seeing a change. Moving over to Broadcom and Meta here. Both of these were down quite a bit, 6.37. Broadcom only down 2.24. They had good earnings, and that allowed them to bounce a little bit. Structurally, you can see Meta still holding well above that 55, holding at the 21 right now at 620.07. We'll see if that zone continues to hold or not. Could be the start of a topping pattern, so you got a nice peak. Do we bounce from here, double top? Do we bounce and lower high potentially? And then we get those kind of bigger breakdowns to the 55 at 549.11 potentially. Momentum bearish, RSI still bearish. And then you got Broadcom. Big wick to the level, 184.88. Let's go ahead and add some levels here. No. So added an upper level here, 221.25, kind of this consolidation low. Does it bounce here, get above that 196.33 level, and then potentially push to 221? Potentially. Still looks like a consolidation, still looks like a breakdown to me. Moving over to staples and discretionaries, you can see staples was actually down a little bit, 0.26 on the week. Inside candle continues to throw wicks there. Let's go ahead and extend that out. In there, didn't quite hit the trend, still at the resistance. 83.43 is the level, and then looking at discretionaries, 4.76% broke these trends, still looking for the 55 touch there at 197.35. My level 197.14 in this zone, highly traded zone there as well. Do we get one more big candle down, touch the levels, and then bounce? Certainly a possibility, but either way, this still looks quite bearish in my opinion, and looking for that 55 EMA touch. Moving over to wood and oil futures, you can see big bounce on wood. So interesting to see that. Maybe there's a little bit of economic strength coming through. You can see momentum on this has been slightly bullish. RSI getting a bounce there. Do we see a higher low off of this low? Potentially continuation through here on a higher high potentially. If wood's showing some strength, that usually means economic strength. Would like to see that follow through off of this bounce here. And then oil prices have been selling really dramatically, honestly, since mid-January. We've gone straight down, bearish every single week, right back to that 66.50 level. Is this the point where we break through this consolidation low and go to much lower lows on oil prices? Seems like a possibility. Have very consistent lower highs, consistent bottom here at that 66.50 level. Super critical here on oil. If this breaks down, that is usually an economic growth factor. Cheap energy does tend to permeate through the entire economy. So Want to see this continue to sell. Momentum bearish, RSI bearish for oil. Moving over to Breadth. Breadth was negative quite a bit, but not as bad as it could have been. Look at this big wick low back into the consolidation on that Friday. So we got a nice bounce on the Friday, ended up holding that 8 EMA on the 50 as well. Also negative, but again, kind of in the same consolidation range that we've been in. Want to see a swing out of here if we can do it. Still doesn't look super great with the high, lower high, but there's certainly potential that it holds this zone. Momentum stepping to bearish, not super great there. Momentum almost fully bearish here on the 20-day. Again, doesn't look super great, but the Friday bounce does give me a little bit of confidence for a short-term rally. Again, 1, maybe 2 days at most. And then ultimately, I would expect this to continue to sell over the medium term. Moving over to 200-day breadth, big down candle here. So this doesn't look nearly as good as the other two. 12.46% back to the lows from mid-January. Huge wick to lower lows, got all the way down to a 45 area for the week. The low was 44.93. Interesting, but we ended up bouncing back above that 50 level just barely. Momentum bearish, RSI bearish. Is this a continuation lower on the medium-term breadth? That's very, very concerning. If it ends up continuing through there, let's go ahead and extend this out. If we get through there and get through this low here, then we could be looking for a push down into the 36 area. You can see consolidation low, important zone there. That's what I would be looking for. 42 is interesting, but realistically, I think 36 is where we would go. And then if 36 breaks, my next level is back down to here, the October of 23 low into the 24 area. If we got a push there on 200-day breadth, that would absolutely be a buying opportunity in my opinion. You can see once we touch that zone, we had many weeks of bullishness from there. But in the short term, if we do get that continuation lower, you can see at least another month to 2 months of selling. Moving over to yields. Yields did pretty much what I thought they were going to do this week. We expected yields to kind of hover between this 3 3/4 up to that 4 range for 2-year yields, and that's where we're at, right at the 4 level, below this 4.08 level, but above that 3.66 level. So in this range makes sense for me. I don't think it's going to crater through here. I think we're probably going to consolidate. This is the zone that makes sense for me. If we get above it, probably going to sell. If we get below it, probably going to get bought up at least a little. And then looking at the 10-year, we'll get a reset on this with the 10-year auction, but this area makes sense. 4.5 makes sense as a peak zone. Kind of got a left shoulder head, right shoulder forming in my opinion. Maybe we push back up to that 4.55 and then sell back into this zone here. Momentum currently bearish, RSI still currently bearish, waiting for this 144 to kind of consolidate. It's been a long time. We got the first touch. This can take another couple of months into June to consolidate into the current range, but for me, it makes sense for this to stay in this area, at least until we get some movements from the Fed. Over to the dollar. What a week for the dollar. It's not often at all you see huge weeks like this, down 3.4%, absolutely massive. The last time we saw a move like this was back here in November of 22. That was 4.14% to the downside, and that continued to go here. So we ended up going another 4.5% lower. Is that what we're going to see here? If we do, 4.5% from current price would take you pretty much back to the lows here. That's 3.5%, 4.5% would be just below it, back into the 99 range. That would be interesting. 200 SMA in play here. I did not expect this at all. What a huge candle. The tariffs not helping out the dollar, at least in the short term. We had a huge dollar push on the election, and since then, just like everything else, we have seen massive selling. So we're right at the trend here. Is it going to hold the trend? Maybe, certainly a possibility, but that's where we closed almost to the penny. But momentum bearish, RSI bearish, 200 would be the target in my opinion at 102.28. Moving over to bonds. Bonds were a little bit negative on the week, 2.5% down for TLT and 1% down for JNK. Realistically, this is not a big move. JNK has been in the same range since August of 24. We're still here in March of 25. I don't think this is going to break by any means. I think we're going to continue to consolidate here. I do expect to bounce off the 55 if we even get that low. 95.61 is that level. Momentum slightly bearish, RSI slightly bearish. So maybe we get a push to that zone, another about 0.5% lower, and then I would expect a bounce from there. TLT, on the other hand, short term, holding that 21 EMA at 89.96. We found that next zone of resistance at 92.82. Talked about that zone there. Momentum, slightly bullish still. Want to see it hold this as a higher low at the 89.16 area. Again, we do have that 10-year auction this week. Want to see how that plays out. But either way, I think TLT has found a base, and I would expect a higher low off of this area here. Moving over to the VIX here, you can see super positive, 19.16% right into the trend zone here. This was the target. We hit the target. We pulled back a little bit. Is it going to reverse back down into this 20 area, maybe as low as the 18 area? I certainly think that's a possibility. So we get a little bit of a retracement here, higher low setup once again, and then we get a push up into this zone here, into the 30s. I think that makes sense. So you get that kind of culmination style move. That was the peak back here before we had a huge wick, which was that July push. That took us all the way up into the 65 area. Super uncommon for that. I don't think we're going to see something that dramatic. It's not impossible, but it's just uncommon. So looking for a retracement on the VIX and then a push up into this zone 32 to 33, I think makes sense. Sometime in the April, maybe May timeframe. And that would give you that culmination style move lower and then a nice buying opportunity in my opinion. Moving over to my accounts, you can see I was down quite a bit on the week, unfortunately, close to like $600 or so. Obviously not nearly as bad as the NASDAQ, which was down like 3 and some percent, but still, I kind of knew it was going to happen this way and I still didn't trade it super well, but overall not terrible. Again, I'm still positive on the year when the NASDAQ is very negative on the year, but again, I should have traded better, a little bit frustrating, but for the Monday, sold some puts, looking for a bounce here into the Monday, Tuesday potentially. Still have those treasury bills on there. Honestly, I should probably buy a little bit more of those. These are going to culminate in the May time frame, looking for those dollars to come through. But either way, very, very slightly bullish, slight loser on the week, which is a bit of a bummer. Let me know down in the comments section what you think of the portfolios. Do you agree with the bond thesis? Do you agree with staying away from cryptos, at least for now? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.